Welcome to Accounting with Parkbench Tutors. In this short podcast we are going to look at a worked example to determine some ratios. For this we're going to use the financial statement of Trimble & Quiver Precision Engineering. Now this is a much simplified financial statement, even so we can use it to determine some of the ratios. Now what you might want to do as you work through this is to pause the presentation as each question is asked and then attempt that task before you view the solution. So our first task then is to determine the gross profit percentage. So we need to know what is the formula to determine this percentage. At this point you might wish to pause and write down the formula. You should have got that the gross profit percentage is equal to the gross profit times 100 divided by the revenue. So let's try and apply that formula using the figures from the statement. So we need the gross profit percentage. So we're going to have to find the gross profit, which I can see there is 2520, and the revenue, which I can see as 3500. So there we are, 2520 times 100 divided by 3500, and that will give me my gross profit percentage, which is 88.2%. Now for the second task we're going to determine the net margin percentage for the company, and again you might want to pause and see if you can write down the formula for the net margin percentage. The net margin percentage is the profit from operations multiplied by 100 divided by the revenue. So what is the profit from operations? In this case we mean it is the gross profit less the expenses. So I'm going to apply that formula using the figures from the statement. I'm looking for the profit from operations, I'm looking for the revenue. And the profit for the operations I can see as 978, that's profit before tax, and the revenue stays as was before, 3,500. So I work that out and I get 27.9% to one decimal place. In most of these examples you'll find if it goes to decimal places, we'll tell you how many decimal places we would like you to work to. Okay, the third task then is to determine the return on equity, or the return on shareholders' funds. So what's the formula that we need for the return on shareholders' funds? You might want to pause. The return on shareholders' funds is given by the net profit multiplied by 100 divided by the equity. So let's apply that using the figures from the financial statement. We need the net profit and we need the equity. And I can see that the net profit is 978 and I can see that my equity is 5025. So 978 times 100 over 5025 is 19.46, but I'm saying we should work to one decimal place here, so to the nearest decimal place that's 19.5%. Task 4, to determine the current ratio. What's the formula for the current ratio? The current ratio is the current assets divided by the current liabilities. So we will apply this formula using the figures from the statement. I want current assets and current liabilities. My current assets, I've got three to add up: the inventories, the receivables and the cash. That's 156 plus 198 plus 28. Divided by my current liabilities, which are my payables here, which are 459. So that's 382 over 459, and if I'm going to express that as a ratio, it'll be 0.83 to 1. Our fifth task, determine the trade receivables collection period. Again, what's the formula for determining the trade receivables collection period? It's the trade receivables multiplied by 365 divided by the revenue. So we'll look at the statement and we'll get the appropriate figures from the statement for trade receivables and for revenue. Our trade receivables are 198. I'm going to multiply that by 365 and divide by 3,500. So that's going to come to 72270 by 3,500, which works out as 20.65 days. That's our trade receivables collection period, 20.65 days. That ends this short podcast as a worked example on ratios, brought to you by Parkbench Tutors and narrated by David Hopcroft. Thank you for watching and for listening. For more information, you can look us up on Facebook, or you can find us at parkbenchtutors.com.